Time to get to Nicholas Smith, MF Global Director of Equity Research. The company is bullish on Japan at a time when some brokerages are making a beeline for the door. Nicholas, good to have you with us. Contrarian. Now, let's talk about Toyota first. Toyota forecasting profit despite the recall while Sony narrows its loss estimate. All that enough to suggest that Japanese companies are out of the woods yet? Better days ahead?
For Toyota, I think, obviously there's something of a downside protection with the stock trading at book at the moment. It's a real PR gaffe to be talking about an upgrade on their forecast at the time when we're just about to have the recall on Prius, which is not in those numbers. I'm uncomfortable being long of the stock at the moment, really, until more of the story is out.
Looking at the market as a whole, you say Japan is the only major market that remains attractive based on valuations. 60% trading below book. Yet most investors we talk to are not keen. They don't believe in the growth story, deflation, aging population, resistance to change. Why do you differ?
Sorry, what I'm saying is I don't like the growth story either. I'm liking Japan as a value story. So what happened last year is that growth stocks moved up quite sharply in Tokyo too. And I'm suggesting people take a look at the value stocks. Japan is a value market. It moves on global trade. So things like price to earnings are not so helpful in a strong cyclical market. You ought to be looking at the price to book, and with price to book, 60% of companies trading below book, I think it's a pretty attractive environment for looking at value stocks. So other markets are very stretched on valuations, and they had a big run up last year and thinking we're out of the woods on the global economy. I just don't think that's the case.
Is the topics a play on global trade?
Sorry, come again?
Is the topics a play on global trade?
Absolutely. The longer-term topics moves in lockstep with global trade. Now, global trade had a big upward move. Seasonal adjusted moved up 4.5% in September, I think, on inventory adjustments of replenishing inventories. Since then, that's not really worked. It looks as if it's rolling over. And if you look at numbers since then that try and extend the series, you look at rail freight in the US, you look at marine transport, you look at domestic freight in China, which slowed from 18% year-on-year in November down to 4% year-on-year in December. I think you're getting a picture of global trade just slowing down. And if you want to look at why that would be, we'll look at sales tax numbers for the US, which I think is a much safer number than the existing store numbers. Those numbers are suggesting there's a slowdown in sales going on, which, bearing in mind the conditions in the US, is not entirely surprising. So we've had a big upward move in global markets. Now it's time to pull back and just concentrate on value stocks.
Nicholas, where do you see the topics and the Nikkei 225 by year end?
I think topics is going to outperform other markets just by going down less. So I see it at about the present levels, and I expect to see other markets lower.
I want to take at some of your calls. You're liking what? Nippon Oil, 5001 JP. You like it. The last time we spoke to you, at least, it's up 2% since you made the call in January. What does it have going for it?
Yeah, I've been saying I like cheap price-to-book stocks. The thing's trading about 3/4 of book at the moment. It's got a dividend yield of 4% against about 1 1/3 long bond yield. The company has a real track record for under-promising and over-delivering on cost cutting. It's got a merger just coming up with 5016 Nippon Mining in a couple of months now. If you look at the previous ones, when it merged with Mitsubishi Oil, it promised, I think, 75 billion yen worth of cost cutting. In 3 years, it did 120, and since then, it's done another 150. So I'm very confident that, there's a lot to do on cost cutting, and that Nippon Oil's a rare case where they can really deliver on this.
But, Nicholas, isn't oil risky at the moment? I mean, refiners face a tough year ahead, and margins will be weak.
Yeah, I mean, certainly there's a lot of spare capacity in Asia. China's, oil refining is one of those areas where China's been adding enormous amounts of capacity. You've got to remember that compared to those markets, Japan's got tighter regulations on benzene and sulfur, so it doesn't compete directly. The main thing with Nippon Oil is that the merger's taking out a lot of capacity, which makes domestic capacity utilization much tighter.
Before we let you go, just to touch on the yen, you say the yen will remain strong, yes? In 20
Absolutely,
seconds?
yeah. I'm expecting 89.90 to continue through most of the rest of the year.
Okay, Nicholas Smith, MF Global, thank you so much for your insights on the trade this morning.